slide up. All right, there we go. Recording in progress, which I always forget to do in my classes. So, all right, so what exactly is a bank? Yes, as I said, most of you, I think, would have had some sort of interaction with a bank. Either you have maybe a savings or a checkings account, the most common accounts that exist. But today we're going to look through a series of different types of accounts that may be more advantageous for you to opt into outside of just a regular savings or checking account. And then we'll look through the process of starting these accounts, the rates that you may get, and other little terms which you may or may not know related to banks and the banking system on a whole. So yes, it seems obvious that a bank is a financial institution which receives deposits and makes loans. So how a bank makes its money, the majority of it is made from the interest from loans or from fees that are charged. So what happens is that the entire system is cyclical. Banks just act as an intermediary for financial transactions between borrowers and lenders. And if you have an account, you are automatically a lender in that cycle of the banking chain. Once you deposit your account into a financial institution, that long list of terms and conditions that most people just click accept when they open an account, it gives banks the authority to lend your capital out to someone else, whether it is maybe a mortgage or a car loan or other types of loans that that institution may provide. And then the interest that is collected from making this loan, it is repaid to you, because when you open an account, you also agree to receive a specific rate of interest in exchange for the bank having your money. So that's what this paragraph on the left is. It's just a summary of what banks provide. Now, in addition to this borrowing and lending, banks also are involved in wealth management tools and currency exchanges. So we're going to get a little bit into brokerage and investment accounts, but I believe there is another course in this series geared towards that. So I won't get too into it to spoil any details from subsequent presentations. All right, let me minimize it. So there are three major types of banks. There are others that we're gonna touch on, but retail banks, which is one that you may have interacted with, like a Bank of America, for example, or Wells Fargo. And they offer typical services like personal banking services, right? They may extend to offer other things, but their main focus is personal banking. Then there are commercial/corporate banks, which provide services to businesses, both small and large businesses, as well as investment banks. Now, investment banks in particular, although they have the name bank, they are responsible for financial services or providing financial services to companies, such as if there is a merger, an acquisition, or an IPO of a company. These investment banks deal with these transactions on behalf of the company. They also can buy and sell securities. And for those of you that don't know, securities are just financial instruments. That's not a term that's included, but yeah, I'll just mention that. And we'll look at a few types of securities like bonds throughout this presentation as well. Now, it's not listed on the slide, but banks can also be ranked in terms of sizes. So you can have national banks, regional banks, and community banks, and also a special type of bank, which is not necessarily mentioned as often, are online banks. So These tend to offer better interest rates because they don't have a brick and mortar establishment. So they're not paying much overheads, or rather they're paying less overheads. So they can afford to offer more in terms of interest. And the top online banks are Ameritrade. Wait, no, those are the brokerages. The top online bank is Synchrony, that's one. And there's JP Morgan, they do have a branch called Marcus. And there are certain places that are strictly online banks alone. They don't have any physical establishments, but they specialize in online and mobile banking. So you can bank from your desktop or your phone. All right, so down to the terms. Some of the terms that you will hear throughout, if you don't hear it now, you probably heard it before. Your routing number, which you use whenever you're carrying out any sort of financial transaction with a check, or you're wiring money from one account to the next. It acts as your, like a zip code, but for the bank, right? Because it identifies the financial institution that you are banking with. Now, before you invest in any bank at all, before you place any money in a bank, you need to ensure that it is FDIC covered or FDIC insured. I used to hear ads for banks where they would mention that at the end, and I didn't know what it meant when I was much younger. But now I know the FDIC, the Federal Deposit Insurance Corporation, it was established in 1933 in response to a series of bank crashes. Thousands of banks and institutions crashed, right? By over leveraging themselves, they weren't able to meet their, so imagine you invested or you put your money in a savings account in a bank, and and you're not able to access this money because the bank wasn't liquid enough or didn't have the money. They took the money, invested it elsewhere, and were not able to meet the needs of their depositors. So the FDIC said, okay, we cannot manage a nationwide or a countrywide crash of or financial institutions. So they were instituted to protect and insure customers' deposits up to $250,000 if the bank, or in the event that there's a banking collapse. Now, before there's an entire banking collapse, the Federal Reserve, for those of you that have done economics or finance, you're familiar with one of the functions of the Fed, which is to regulate the banks, right? Now, what that means is that the bank has to perform regular stress tests, and they have to undergo a series of financial exams to make sure that they are financially sound, and they need to keep a certain level of reserves, or that's like backup cash, just to make sure that all their depositors' needs can be met. So we've been through routing number, the FDIC and their function. Now, a savings account, which I would think most of you would either have a savings or a checking account. We're going to see other types of accounts in a little bit. Now, a savings account is an interest-bearing account, and I want to use the word interest-bearing very sparingly, because if you've inquired about your actual savings account, which you should, everyone, if you have any sort of account, a savings or a checking account, you should know what the rate of interest is on the account. Reason being, there exists inflation, right? Which means your money today is not going to be worth the same as your money, that same amount 2 months from now. So what you need to do is make sure that in your savings account, your checking account, whatever it is, it outpaces the rate of inflation so that your purchasing power does not diminish. So even though you have the same amount of money it still does not equal the same purchasing power as long as inflation exists. And inflation is pervasive, it won't stop. Prices will keep going up, your purchasing power will keep diminishing. So in order to outpace inflation and to secure or even increase your purchasing power, you need to either invest in an account that will provide reasonable yields or look into investments. And that is, I believe, the 5th lecture series coming up. So for a savings account, there are advantages. Most people open a savings account just to temporarily hold their money in order to, if they have some sort of savings aspiration, it's a temporary reserve for cash where you can easily access the cash, which is very important because that's the difference between a savings account and another account which may earn a higher interest rate, which we'll eventually get into. All right, I see. Does the FDIC insure both savings and checkings account? Yes. So I'm going to get into the other, but good question. Thank you. They insure savings, checkings, and money market accounts, which we're going to eventually do. And then they do not insure CDs. And even though I have banks here, I want to include credit unions as well, right? Because if you have money in a credit union, it's not covered by the FDIC. It is covered by something called the NCUA, which is the National Credit Union Administration, which functions in the same way as the FDIC. Where he'll ask, don't most savings accounts have interest rates that are well below inflation? Yes. Where have I been able to find accounts that outpace inflation by themselves? The answer is it is difficult, but you can. So CDs offer a higher rate of return, and the longer the term you commit to is the higher the rate of return that you'll get due to that risk involving for holding. We'll get into it, but yes, there are accounts that you can use to not necessarily outpace inflation, but at least move at a closer rate to inflation, right? And right now it's rising as we approach the Christmas season. I'm sure you would have heard about supply chain issues right now, and prices that are going to go up. We've seen it through gas prices, everything is going up and purchasing power is going down. So knowing where you can invest your money or where you can safely place your money is imperative, especially now. But thank you for those questions. Keep them coming and I'll answer them as we go along. All right, so your checking account, as the name suggests, you can write checks from this account. Most people use a checking account over a savings account to receive any sort of salary or to pay their bills from. So it's an account that cash flows in and out of. In terms of a savings versus a checking account, the savings account, the FDIC stipulates that you have 6 withdrawals per year on your savings account. I believe you can withdraw more than that, but there are going to be very steep penalties charged for that. Now, a third type of account is a brokerage account. So whereas a savings account or a checking account, the bank uses that money again in that borrowing lending cycle to finance loans. But for your brokerage account, this money is used to fuel investments. So you will either be responsible for investing yourself, or you can have a broker that is obviously a registered or licensed financial advisor. Nothing I say here is financial advice. I'm not a licensed advisor, right? And you are able to invest in stocks and other types of securities. I believe they also offer like they do short selling. But as I said, there's going to be an investment class, so I don't want to spoil the surprise on that. All right, so a few fees. I said before that banks make most of their money through interest from loans and fees. So two of those fees, overdraft fees and returned item fees. The travesty of these is that you're being charged by the bank for not having money. So if you put in a withdrawal amount that's more than what you actually have, the bank is going to charge you. If you write a check and you have insufficient funds in your account, right, or your check is closed, you will also be charged a returned item fee for that. So banks really do penalize you for not having enough money. So you need to ensure you take special care whenever you're withdrawing money or with credit card payments. And I think there's another class for that too, making sure that you're not charged any late fee and you pay everything on time. The most retail banks offer brokerage accounts. No, would I need to find a financial firm? Very likely you'd need to find a financial firm. Some retail banks offer brokerage accounts, but the stipulations for you to open it are much higher than that of just a savings or a checking account. For example, when I first moved here, I am from Jamaica and I didn't have any sort of paperwork tying me to the United States here when I first came. But I was able to open a Bank of America account here. They said I couldn't open an investment or brokerage account if I wasn't a citizen here, or if I didn't have a green card, I couldn't just open it on a visa. So there's some restrictions, but if you were born here, or I believe if you have a certain amount, you can open it as well. At the time, I needed to be putting in 20,000 per month, or it was some ridiculous fee at the time. I'm sure that has lowered over the years because that was 6 or 7 years ago. So yeah. I do have a separate brokerage account though, not at BOA. And from it, I can carry out my trades and whatnot. So you can look up your specific bank because not all retail banks offer it, but check with your bank. Most of these are just a Google search away. As I said, I believe BOA offers that as well. But some retail banks don't offer investment services. So you'd have to look for one that does, preferably one that specializes in it. So you will have an in-house broker, because having your investment banker or somebody that you're consulting any sort of brokerage with, you want to have it in-house instead of having it all over the place. Usually when they're all over the place, it dissuades you from investing because you need to contact too many people to get it done. Well, that's my personal experience. So the two accounts that I want to place focus on are money market accounts and CDs. So these two accounts, when you first go to a bank, they say checking or saving. They don't say money market or CD or anything, but these are two other types of accounts that you can open with a bank. And the interest rate on CDs and MMAs, which are money market accounts, which is what I'll call it from now on, are higher than that of savings and checkings accounts. Bear in mind, it's not that much higher, but it's still higher. The more for a money market account, what it is that the funds from that account can be used to invest within mutual funds. So you will be given a higher yield on that account by virtue of the fact that the bank is going to use your funds for a higher yield activity. So in return, you will receive a higher yield. And as I said, it's comparatively higher or comparably higher in comparison to the savings and the checking account. For the MMA, you can write checks from it and you can get a debit card associated with it, but you wouldn't want to. These accounts, I would say, would be geared towards more passive aggressive investing. So it's somewhere where you need to leave your money, but you're going to leave it for a specific period of time. And in return for leaving it, right, and in return for the bank being able to use it to more aggressively invest in other financial instruments, they will give you more money for it. But if you withdraw money before the term ends, there's going to be some sort of steep penalty that's going to be incurred. But the interest rate offered here is higher. Also, one thing to note, the 3 accounts I spoke about before, which is savings, checkings, and the MMA, they have a fixed rate of return. A variable rate of return. So if there are fluctuations in the market and rates go up, or rather inflation goes up, your rates sometimes go down. For the certificate of deposit or your CD, which is where you choose the term, and let me show you the different terms and here. These are this is the average certificate of deposit rate in California, since we're in California, but you can do it by state or by zip code. And these are some of the banks here, I think, and it will tell you if they're FDIC banks. Now you know what it means, that your deposits are secured up to $250,000, but these are the rates that they offer, or the APY, which is different from the APR, which we will get into in the next 2 slides. All right. Oh, I also meant to show you that slide just to contrast credit card rates versus returns that you'll get on your savings account. And the reason you should be aggressively investing and not putting your money in a bank to lose money over time. So this is the average credit card rate here on accounts based on different types of cards. Most of you, I guess, would have maybe a student card, 16.29%. Ridiculous when your savings account is barely giving you 1%. So if you do have a credit card, this is if you keep a balance on it and you're charged interest and whatnot, but a credit card is a loan. So as I said, it's a cyclical, or the institution works in a cyclical way. They give loans, but they take the money from you to give those loans. So if you think about it, what you want to try to do is to balance. You shouldn't take a loan with a higher percentage than what you're actually gaining elsewhere, ideally. So aside from this, there are also government bonds. They're also safe. So instead of investing in stocks, you can invest in government paper or T-bills, which are short-term investment instruments. But I also believe there's a class for that as well. So, all right. So just a little comparison of the savings, checking, and the money market accounts. So I was asked before if savings and checkings are FDIC insured. They are, or NCUA insured. So are money market accounts. But the CD, which is your certificate of deposit, is not, right? because what they use the money for in the CD, there's less liquidity on your certificate of deposit. Meaning once you lock into that 1 year, 2 years, 18 months, whatever it is, the bank doesn't expect you to pull that money out. Also, I believe the banking system is under a different umbrella from the investment system, and the CD goes towards financial instruments, I believe. And that's why you get a higher rate of return. But again, there is a lock-in, there's a longer and more strict lock-in period for that. And you can see check writing, debit cards, if that matters to you, but I would imagine that you would get one of these accounts for your regular transactions, but not to keep for a very long time. So I would advise having a savings, checking, money market, or CD account for a short to medium term. Short term meaning a year or less. Medium term anywhere between 1 and 5 years. But you shouldn't really just have your money sitting in a bank for 1 to 3 years. Not when there's so many different financial instruments for you to make money from now. There are NFTs. There's all sorts of crypto coins. There are stocks, there are bonds, there are bills, and as I said, government paper. If you want to move away from high risk accounts or high risk instruments, you can invest in government paper, which is relatively zero risk, thereabout, or an index fund, which you will get a little piece. It kind of averages all stocks within a specific portfolio. So you're investing in multiple stocks at once, not just one. And it's usually done through a brokerage firm or an investment company. But again, this is not an investment talk, so let me move on. All right, this part here, if most of you have a savings or checking account, you would already know how to go through this setup. But usually applying for an account here is super easy. Once you have your ID, some amount of money, and your address, and I believe a proof of address may be needed. Some savings accounts, like with Chase, they require a monthly deposit of $5,000 minimum for some of their savings accounts. So the thing is, once their stipulations get higher for what the account needs or what it requires, it is assumed that that's a higher risk. So as a result, you should get a higher return on that account. And if that is not so, then you should probably go to another bank and find a better offering. Your brokerage account, it is super easy to open accounts here. As I said, once you have a proof of address, some national ID of some sort, and a social, it's super easy to open accounts here. And I say this in comparison to opening accounts in Jamaica, where you need like the blood of your firstborn to open an account. You need a stamp from your what would be the equivalent of a notary here. Some stamps, you need school documents, you need a whole lot. So you should take advantage of the ease to open accounts here, and make sure you have an active savings / brokerage account, and you can look into other CDs. I'm going to show the slide again with the rates so you can compare later. One thing I wanted to say here, how to deposit a check. This is the conventional way of depositing checks. One, a lot of us don't get paper checks now. If you do, there are apps that allow you to deposit a check online. So you can just skip to step 5. The mobile deposit feature on your banking app where you can just scan and deposit that check into your account, right? And again, it may be a few days before you see it reflected and whatnot. So the main point I wanted to drive home is banks do serve as a tool for facilitating the flow of money in the economy. However, you should ensure that you are getting the best bang for your buck when you open a banking, any sort of account, savings, checking, MMA or CD. In terms of rates, make sure you shop around for rates before just settling on one bank. Like, not just because it's the bank your family banks with or something. You should shop around for the best rates on loans or on savings accounts before settling into one bank. This is not like school. Banks are not your friend. Their purpose is to turn a profit, right? So you need to look out for your best interest when you're depositing money in a bank. As I said, just do your checks and balances and make sure your money isn't sitting there devaluing over time. I would implore you to tune in to the subsequent series on investments so you can learn how to start getting your investment game up if it's not already there, and you can learn the different options you have available. And I know this was supposed to be talking about the banking system, and maybe you thought it was how to open a bank account and whatnot. And yes, I did state that here, but I also want to emphasize, as I said, make sure you are using your money to its full potential. A bank may not necessarily, and will most not likely, do that. So yeah, be wise with your money, and I hope you learned something today. That's it for me. Short and sweet. Let me turn this over to Nick. And well, before I do, are there any questions, comments, concerns, queries?
Actually, Professor, could I ask a question?
Sure.
So I know that you briefly mentioned credit union a little bit earlier too, and I was wondering. So there seems to be, like, some people say that there's a lot of advantages to using a credit union because they're more focused on the individual than trying to make money as compared to a bank. What would you say some of the advantages or disadvantages of doing that are?
Of joining a credit union versus
A
bank. Well, what I've seen is that credit unions often offer higher rates off the bat, higher rates of return. So that's one way they prioritize their customers over, say, a larger bank, right? Credit union, from the name, in terms of the rates, borrowing rates are often much lower than banking borrowing rates, and which is great because any sort of savings that you can get from a lower interest rate on a loan or a higher interest rate on an investment account will work in your advantage. I believe also withdrawals, they allow more flexibility in terms of withdrawals and fees. So both number of withdrawals that you're allowed, as well as the amount of fees that you're charged, or past a certain limit, they have much less fees than a mainstream bank or a commercial bank. Those are the major advantages. I know some credit unions rates also are tied to institutions. So like a credit union associated with a school would give better rates to members of that community. So oftentimes a credit union just offers better rates generally. The disadvantage is that they don't have or most of them don't have the convenience of bigger banks where you're able to find a BOA ATM on any corner, or their mobile banking apps or their online banking may not be as advanced as, say, a major bank. But again, pros and cons everywhere, and you can decide if the convenience of having more ATMs, easier customer well, usually smaller credit unions tend to have much better customer service. And they're very, very customer focused more than a bank. Yeah, so I hope that answered your question, Nick.
Yeah, definitely. Thank you. I guess another quick question that I have just too is like, sometimes like, for example, like I just remember growing up, my mom would go to Chase sometimes, or Bank of America, or Wells Fargo. Like she had multiple bank accounts.
Mhm.
Is there a particular reason or advantage you'd say in doing that, or do most people just stick with one bank?
Well, I would say that's a more personal question, because I'm not sure if, or maybe I can look up the stats for it, in terms of the number of bank accounts people have. I personally have multiple bank accounts because the offering of one bank for one instrument may be better, and that's what I use. So I will choose to, so for example, credit card rates, for a Citibank credit card may give me a better or they may have better APYs than Bank of America, for example. So opening different accounts with the bank, it's easier for you to be issued a credit card from that account if you already have a savings or checking account with that bank. That's one reason. The second one could be bonuses. I can tell you shamelessly, I opened a Chase account only because there was a special at the time where I could get $1,000 for opening a savings account. And literally that's the only reason I have a Chase account. No other reason. Also, again, some banks, for you to open a brokerage account, it's easier for you to have, say, a savings account there to transfer money across. So if you were to route your earnings to that savings account, and then you're able to move it to the brokerage account and then invest it from there, having a savings account tied to that bank that offers brokerage account flexibility, that could be another reason. So, but again, I think having multiple accounts is a personal thing. Once you keep track of all your money, I don't think there's a major downside to having multiple savings accounts or multiple checking accounts. But again, just being mindful of the rates on these accounts and having money sitting in it for a long period of time, where you could be gaining a higher potential rate of interest on these accounts. That's the only thing I would caution when you open multiple accounts, just keeping track of it and making sure you're not losing money by splitting yourself or spreading yourself too thin.
Gotcha. For sure. That makes sense. That was a great answer. Thank you.
No problem. Any other questions because I answered most of them while I was going along. Any other questions you guys want to audibly put out or just type in the chat? Even if they're not necessarily bank related, if they're bank adjacent or even investment adjacent. Again, I don't want to spoil too much from the subsequent series that you guys have or lectures that you have coming up. But my experience in terms of investing, I'm not an avid investor in the US market. Well, not now. I do have, some money in crypto. I have some stocks. I have some bonds. I have I'm well diversified. So my risk is spread out across multiple financial instruments of varying risk. So, but Yeah, this is the time to ask questions, and if not, I'll just pass it over to you to do to address whatever business you guys have after this. All right, no questions? Cool.
Actually, I don't want to hog it, but I could ask another question.
I mean, nobody else is asking, so feel free.
Cool, cool. All right. Well, one thing that I had a question about was like, I kind of heard from other places too, and you talked a little about it, is that with money, there's always going to be inflation. So the value of it is technically decreasing in time. So, which is why it's a good, which is why I heard it's a good idea to try to invest in securities, because that's the opposite, ideally, that it'll be increasing in time. Would you recommend that it's a good idea then for like people our age to start investing in securities?
Buy securities, what? Because there are different types of security. There are different. So did you mean like bonds or
Bonds or stocks or ETFs?
Yeah. So 100%, I preach investment daily because you're absolutely correct. You are losing money against the rate of inflation. So let me tell you the actual inflation rates. For 2019, it was 1.81. For 2020, it's 1.23. Currently, it's in right now, they still, because we haven't gotten to the end of the year yet, but so far it is at 1.24.
Okay.
It's looking like. So once you have any sort of investment that gains more than the rate of inflation, you're good. So I would encourage first starting investing with less risky, more secure assets. So instead of putting your money in savings account, I would encourage putting it in like a T-bill so a treasury bill or a treasury bond is government paper. They're gonna give you, it's an agreement. So in exchange for you giving them your money, they will guarantee a certain rate of interest. I think T-bills and bonds interest rates are down right now, but those are some of the most secure assets, or index funds where they invest in pieces of companies. So you don't have to figure out which specific company you want to invest in. So 100%, I would say, yes, you should be investing in securities of any type or of every type. Likely one that agrees with your risk appetite, because if you are a risk seeker, you are an avid risk taker, you will want to invest in stocks. The downside of that is not everyone can handle investing in stocks, and it's nice to talk about and see, but when you have skin in the game, it's very difficult to control your I see nodding. Yes, it's very difficult to control your emotions. And over time, I mean, you'll learn, or you can hire someone to do it for you, right? Because they're money managers or fund managers who it's their job to do this. So yes, I would definitely say invest in securities that are available. Less popular option would be, well, it's popular now, but I would say less, I'm trying to figure out the word for it. Formal maybe would be, and I mentioned it before, cryptocurrencies and NFTs, because return rates are crazy on cryptos right now. Well, they were from before. If you were in Bitcoin, Ethereum, Solana, or any or most major currencies, they fell during COVID and they've been going up. But something that you may want to look into, and I hope you guys include it in the investment series, are NFTs. The entire platform that cryptocurrency and blockchain technology is based on, there are holes or flaws, and these are technical holes, which I don't really want to get into, but I would say start looking into financial instruments. Most of you, I believe, would be in what, first, second, or third year. So you still have time. You have the comfort and the cushion of school, where if you lose all your money, I mean, you don't have a house or kids, or maybe you do, but less likely to have certain major responsibilities. So now is the best time for you to play around and explore all the options that are available in terms of investing. So yes, I agree. You should 100% invest in financial instruments or in securities. Long-winded answer.
For sure, for sure. Yeah, I think it's definitely. I think for me, since I'm more of a risk taker, I wanted to. I tried, investing in stocks, and I'm a fourth year, so I've been doing that for a bit. And so I've had some good things, but I've also learned the hard way a little bit too sometimes. But as you said, there's not as much. What's nice about being young is there's not as much risks involved right now, right? Because I don't have too much money to begin with, so therefore not as much to lose.
True. And it's not that there aren't much risks, but you're more willing to take it because it's easier to bounce back. And I would say that school is sort of the opposite or antithesis of investing, because in school you have a syllabus, there are tests, and there are questions you either pass or fail. There are, rubrics and metrics and whatnot, but in the stock market, it is so random. There are ways that you can, project or predict, but not with 100% accuracy, obviously. And failure meaning losing money or the stock going down. And I wouldn't even say failure, I would say learning experiences, because you can still make money from the stock going down by short selling or buying a put option or a but. Those are different types of other investment instruments where you're betting for the stock to go down. So short selling, you borrow somebody else's stock, you anticipate the stock going down, right? So you borrow it, there's some sort of collateral. If your bet is correct and the stock goes down, right, you can repurchase, and so you would sell it for that high rate. If it goes down, you can buy it back, and then you get the difference between that selling cost and that buying cost, and then you can repay the debt of stock, because remember, you borrowed it originally. So that's what, in essence, what short selling is. So you can learn from the stock going up and down. And again, it's kind of different from school, where in school you're penalized, I guess, for getting it wrong or for failing or whatnot. In the stock market or in the real world, it's just a learning experience. You can learn how to capitalize from every single opportunity there is within the stock market. So yeah.
For sure. Thank you.
All right. No other questions?
Yes, no other questions. Yeah, thank you guys so much for coming today and to the presentation. It was really great and honorable to hear from Professor Boswell, and I'm super happy we could make it. Carl, you got any words to add?
Just wanted to say thank you so much, Professor. That was great. Everyone, show some love in the chat. Put some emojis in the in the Zoom. But yeah, thank you so much, Professor. I really appreciate it. Learned a lot myself. I'm pretty sure everyone else did. I just wanted to say that we're going to continue these series. We got a couple more classes planned out, and we're going to continue this. And hopefully, we can have Professor Boswell back as a guest maybe later on. But yeah, if there's no questions, you guys can proceed to head out, or you can kind of email us, and we'll get those questions over to her if we can't answer them ourselves. So thank you so much for attending tonight. Everyone can kind of head out. I'll kind of stay back a little bit, me and some of the directors. Well, me and Nikolai and Sienna will stay back, but everybody else is free to head out. Thank you so much.
No problem. And if you have any questions after this, I'm in 9242 in Bunch. So feel free to drop by my office or